Hello everyone, welcome to the Pahari Talim Foundation, a dedicated YouTube channel for civil service aspirant. So today's our topic of concern is banking system and capital market. As you know that we have started the lecture series on Indian economy that is very useful for your UPSCs and other state public service examination. And this session is based on MCQ. As you know that my name is AMIR FEEROZAL. So without wasting time, let's start the video. So the question number first on your screen is, what are gilt edge securities? So the options are: option A, securities issued by the multinational; option B, securities issued by the government; option C, securities issued by the private sector; and option D, securities issued by the joint venture companies. So the right answer for this question is your option B. So security issued by the government. So what does this gilt edge security mean? So the gilt edge securities are the high grade bonds. These are actually the high grade bonds issued by the certain governments. Okay, by the certain government. So government security, what does this government security mean? So government security mean a security created and issued by government for the purpose of raising a public loan, or for any other purposes. So gilt edge securities are favored by the investors. These are favored by the investors who seek predictable returns with little risk of default. Okay, these investment carry similar trade as the United States Treasury's securities. So a lot of people didn't understand the meaning of this security. So what does this security mean? So securities refer to the fungible, negotiable, financial, instrument that hold some type of monetary value, monetary value. Okay, so it represent an ownership position in a publicly traded corporation via stocks, etc. And like some, there are four type of securities. There are four type of securities. So that are like debt. This is also a type of a security, and then we have to take it as equity. After that derivatives. And hybrid securities. So the answer for this question is the securities issued by the government. So what are the gilt edge securities? So these are the securities that are issued by the government. So the next question on your screen is, the banks are required to maintain a certain ratio between their cash in hand and total assets. This is called as. So the options are: option A, that is SBR, that is statutory bank ratio; option B, SLR, statutory liquid ratio; option C, CBR, central bank reserve; and option D, CLR, that is your central liquid reserve. So the right answer for this question is your option B. The bank that are required to maintain a certain ratio between their cash in hand and total asset. So this one is called as SLR, that is statutory liquid ratio. So the bank are required to maintain a certain ratio between their cash in hand and the total asset. So this is called as the statutory liquid ratio. So SLR is the portion of a fund. Actually, it is a portion of a fund which banks are required to maintain. Which banks are required to maintain in the form of a cash. It should be maintained in the form of first we can say that cash, or we can say that a gold reserves, the government approved security before providing credit to the customers, before providing credit to the customers, okay. So if we take the other aspect of this SLR, that is your statutory liquid ratio. So the monetary policies instrument can be broadly divided into two parts. That is, one is your quantitative, quantitative measure, or we can say that as monetary policy, and the second one is qualitative, that is your one is the quantitative monetary policy, and other is the qualitative monetary policy. Okay. So what does this qualitative monetary? So actually it is the selective method of control. It is the selective method of control, as it restrict credit for a certain selection, whereas expand for the other. That is known as the priority sector. Priority sector. We can say that it is a priority sector depending upon the situation. Okay. And another version is quantitative monetary policy. So quantitative monetary policy control the total quantity of a credit and instrument applied on each and every institution equally. So it is the instrument that control the total quantity of the credit and the instrument apply on each and every institution equally. So SLR, that is your this one is SLR is a part of the quantitative monetary policy. The other monetary policy instrument, that is your qualitative monetary policies. If we say that, if we can look at the other monetary policies instrument, there are some other monetary policy, that are other monetary policies instrument, which includes your repo rate, like reserve repo rate, reverse repo rate, and after that bank rate. That is the other monetary instrument policies. After that your open market operation, etc. So the answer for this question, the bank that are required to maintain a certain ratio between the cash in hand and the total asset. So this is called as statutory liquid ratio. Okay. So the next question on your screen is, word bull and bear are associated with which branch of commercial activities? The word in economics, there are a term like a bull and a bear, and these are associated with which branch of the commercial activities? So the options are option A, that is foreign trade, option B banking, option C share market, and option D manufacturing. So the right answer for this question is your option C, that is the word bull and bear are associated with your share market, or we can say that stock market. So if we look on the other aspect of this bull and bear, so a stock market or we can say that equity, or we can say that equity market, equity market or share market is the aggregation of buyer. It is actually the aggregation, it is the aggregation of buyers, it is the aggregation of buyers and seller of stocks, and seller of stocks, that we called as shares, which represent the ownership claim. It represent the ownership claim on claims on business, on businesses, and these may include security listed, like listed on this your public stock exchange, like public stock exchange, as well as the stock that is only traded privately, such as share of the private companies. Okay, so a bull market, what does a bull market? A bull market is a market. What is does a bull market, what does it mean? Bull market. So a bull market is a market that is on the rise and is economically sound, while it is economically sound. See, economically sound. While what does this bear market mean? What does this bear market mean? So a bear market is a market that is receding, that is receding, where most of the stock are declining, where most of the stock are declining, most of the stock are declining in value. Okay, so what does this bull market and bear market mean? So a bull market is a market that is on the rise and is economically sound, while a bear market is a market that is receding, where most stocks are declining in value. Okay, yeah, actually a bear market is a speculators who participate in fall in the price of the securities. He sells securities for a future delivery. He sells security which does not possess, with a hope to buy securities at a lower price before the date of the delivery. So in India, we can say that a bear is also known as mandiwala, is also known as a mandiwala. So that is a point. So a bull is a stock market speculators who buy a holding in a stock in expectations that is in the very short term it will rise in the value, whereupon they will sell the stocks to make a quick profit on the transactions. Okay, so this is all about this bull and bear. So the word bull and bear are associated with the branch of the commercial activities that are associated with your share market. So the next question on your screen is, which of the following is at the apex of the industrial finance in India? Okay, so the options are option A, that is Industrial Finance Corporation, option B, Reserve Bank of India, option C, Industrial Development Bank of India, option D, Industrial Credit and Investment Corporation of India. So the right answer for this question is your option C, that is Industrial Development Bank of India. So the Industrial Development Bank of India is a government owned bank. It is a government owned bank in India. It is a government owned bank in India that was established around 1964. So the sole objective of this bank was to extend the sole objective. What are the objective of this bank? Objectives. So the objective of this bank was to extend industrial the industrial credit support industrial credit support to the needy industries in India, to the needed industries in India. Okay, so which of the following is at the apex of the finance, industrial finance in India? So your option is IDBI. So Industrial Development Bank of India. So the Industrial Development Bank of India, that is the IDBI, was established in 1964 as an apex financial institutions to provide credit and other financial facilities for the development of the fledgling Indian industries, and its headquarters is in Mumbai. So its headquarters is in Mumbai. So the next question on your screen is, the first bank established in India was, which was the first bank that was established in India? So the options are option A, that is Punjab National Bank, option B Trader Banks, option C your State Bank of India, and option D Bank of Hindustan. So the right answer for this question is your option D, that is Bank of Hindustan. So the Bank of Hindustan set up by the agency host of the Alexander, set up by the Alexander and Company, Alexander and Company, in the year 1770, and was the first bank established in India. Now it was no longer exist now. Now this is not exist. It was no longer exist now. Okay, so if we look at this the Imperial Bank, there is some other bank in India, that is the Imperial Bank. Okay, so the Imperial Bank was formed in 1921 as a joint stock bank by the amalgamating the Presidency Bank of Bombay, Calcutta and Madras. So now the State Bank of India was created. It is now the State Bank of India, that is your SBI, was created in the year 1806. That is called as the in Kolkata, that is called as the Bank of the Calcutta. So if we look at the other aspect, in 1809 it became the Bank of Bengal, when the bank was granted as a charter to serve all the Bengal. Okay, the imperial government by the middle of the century created two more regional banks. The Bank of the Bombay was created in Bank of Bombay was created in 1840 and was soon joined by the Bank of Madras in 1843. So together with the Bank of Bengal, they become known as the Presidency Bank. They become known as the Presidency Banks. Okay. So the Imperial Bank of India was nationalized by the government of the India in the year 1955, with the Reserve Bank of India taking 60% state, and was changed to the State Bank of India, that is your SBI. Okay. So SBI Bank is the largest public sector bank in India. It began with the establishment of the Bank of the Calcutta in Kolkata on 2nd of June 1806. So it was first ever joint stock bank of British India, established under the sponsorship of government of Bengal. So its tagline was at that time was the banker, because the examiner asked question on the different aspect. So the banker to every Indian. So the tagline of the this SBI is the banker to the every Indian. Okay, so the next question on your screen is, a schedule bank is one which is included in the, what does the schedule bank? So a schedule bank is one which is included in the, your options are option A, that is second schedule of Banking Regulation Act, option B, second schedule of the Constitution, of course this one is not, option C, that is second schedule of the Reserve Bank of India Act, and option D, none of the above. So the right answer for this question is your option C, that is a schedule bank is a one which is included in the second schedule of the Reserve Bank of India Act. Okay, the bank in the modern banking system is a subcategorized in India. In the modern India now, the banking system is subcategorized as, if we look at the first of all, these are the schedule bank. These are the schedule banks. That is one the subcategory. Another is a non-scheduled bank. Another are private banks are coexist in India. Okay, and the public bank. So the bank in the Indian banking system is subcategorized as scheduled bank, non-scheduled bank, private banks, and public bank. So what does this scheduled banks mean? So the scheduled banks are those banks that are listed under second schedule of the Reserve Bank of India Act, that is in 1934. So the scheduled banks are those banks that are listed under the schedule second of the Reserve Bank of India Act 1934. So the bank that paid up the capital and raised fund must be at least 5 lakhs to the qualify as a scheduled bank. Okay, so what does the this qualification criteria for this scheduled bank? So the bank paid up capital and a raised fund must be at least 5 lakh to qualify as a scheduled bank. Okay, these banks are liable to low interest loan for RBI. They have also a membership in clearing house. So they are also have numerous obligation to fulfill, such as maintaining an average daily cash reserve with a central bank. Okay, so there must be a point like the scheduled bank and non-scheduled bank. Okay, so if we look at the this scheduled bank, they are listed in the second schedule of the RBI Act. Okay, they have to be paid up of capital of 5 lakh or more and compile with the requirement of the RBI's. Sorry, they authorize, if we look at, they authorize to borrow funds from the Reserve Bank of India, and they are comparatively more financial stable. So the scheduled banks are the more stable. And if we look at this non-scheduled bank, so they are not listed in the second schedule of the RBI Act. And number second, if we look at the point, there is no such condition that need to be fulfilled for it's considered as a non-scheduled bank. They maintain cash ratio with themselves. They are not allowed to borrow funds from the Reserve Bank of India, and these banks are actually risky. Okay, so the scheduled bank is the one which is included in the second schedule of the Reserve Bank of India Act 1934. Okay, so the next question on your screen is, what is the animal on the insignia of the RBI? The animal that is on the insignia of the RBI, the options are option A, that is your lion, option B, tiger, option C, panther, and option D, elephant. So the right answer for this question is your option B, that is tiger. So tiger is the animal on the insignia of the RBI. So tiger is the animal represent on the insignia of this RBI, insignia of the RBI consists of two things, that is a tiger and a palm tree. Tiger and a palm tree. Okay. Initially, the signia of this RBI consists of lion and palm tree, but later it was decided to replace the lion with the tiger. So, because the tiger is the national animal of India, because tiger is the national animal of India. So that's why the insignia was replaced as tiger instead of lion. Okay. If we have to look at some point on this RBI, so RBI, that is your Reserve Bank of India, that was formed on 1st April 1935. So the next question on your screen is, which of the following is the banker of the bank? Which of the following is the banker of the bank? The options are option A, that is IDBI, option B SBI, option C RBI, and option D ICICI Bank. So the right answer for this question is your RBI, option C. So the banker of the bank is your RBI. So the Reserve Bank of India, which act as a banker to the central bank, was established in this 1st April 1935. Okay, the Reserve Bank of India was established on 1st April in 1935 in accordance with the provision of the Reserve Bank of India in 1934. In the provision of 1934, the central office of the Reserve Bank was initially established in so first of all, is established in Kolkata, but was permanently moved to Mumbai. In 1937. Okay, the central office is where the governor sit and where the policies are formulated. So if we look at the Sir Osborne Arkell Smith was the first governor of the Reserve Bank of India. Okay, this is the point. There must be a point like it is the central bank of the India. It is also the central bank of India. So the recommendation of the Hilton Young Commission in 1926 lead to the formation of the Reserve Bank of India. Okay, so RBI was nationalized. If we look at the nationalization of RBI, so it took place on 1st of Jan 1949. So this is the point of the concern, and examiner have to be mentioned sometime in this examination. Okay, so some other point regarding there must be some pre-independent banks that start. If we look at the central bank of the General Bank of India, that is established in 1786. After that, the Old Commercial Bank, that is started in 1881. After that, Bank of Bengal in 1809. Bank of Bombay in 1940. Bank of Madras in 1943, and there are many more pre-independent bank that start in different year in the India. Okay, so the next question on your screen is, who is responsible for the collection and publication of monetary and financial information? So the options are option A, that is Finance Commission, option B Finance Ministry, option C, Reserve Bank of India, and option D, that is Auditor and the Comptroller General of India. So the right answer for this question, RBI is one who is responsible for the collection and publication of the monetary and the financial information in India. So the right answer is your option C, that is RBI. So the next question on your screen is, bank rate is the rate at which. So the options are: option A, a bank lend to the public; a Reserve Bank of India lend to the public office; option C, the government of India lend to the other countries; and option D, the Reserve Bank of India give credit to the commercial banks. So the bank rate is the rate at which the Reserve Bank of India give credit to the commercial banks. So the option D is your right answer. Okay. So the bank rate refers to the rate charged on the credit or a loan offered by the central bank to the commercial bank without any collaterals. Without any collaterals. Okay. So the bank rate is the quantitative credit control measure under the monetary policy of the government, and it is used to control the overall supply of money in the economy. Okay. So it increase at the time of inflation to reduce the total money supply in the economy, and decrease at the time of deflations to increase the total money supply in the economy. Okay. So the next question on your screen is, the National Stock Exchange function from. So in India, the National Stock Exchange function from. The options are: option A, that is New Delhi; option B, Mumbai; option C, Nagpur; and option D, Kolkata. So the right answer for this question is your option B, that is Mumbai. So the National Stock Exchange function from Mumbai. So the National Stock Exchange is a government-owned stock exchange in India. It is located in Maharashtra, Mumbai, and is what established in 1992. It used Nifty 50 as its index. Okay. So Nifty was introduced by National Stock Exchange on April 21, 1996. So it represents the weightage average of 50 Indian company stock across in 24 sectors, which account for around 60% of the capital market capitalization. Okay. Some other point like Sensex. There must be a point, that is Sensex was introduced by the National Stock Exchange in 1st Jan 1986. Okay. So these are the point. So Bombay Stock Exchange, there must be a Bombay Stock Exchange. So it is one of the oldest. It is one of the Asia's oldest stock market. It is one of the Asia's oldest stock exchange. So it was established in the year 1875, and it is the world's 7th largest stock exchange. Okay. So the National Stock Exchange function from option B, that is Mumbai. So the next question on your screen is, repo rate is the rate at which. What does the repo rate mean? The Reserve Bank of India lend to the state government. Option B, the International Aid Agency lend to the Reserve Bank of India. Option C, the Reserve Bank of India lend to the bank. And option D, the bank lend to the Reserve Bank of India. So the right answer for this question is your option C. So the repo rate is the rate at which the Reserve Bank of India lend to the commercial banks. Okay. So repo rate is the rate at which RBI lends money to the commercial banks. Okay. So repo rate is the rate at which the Reserve Bank of India lend money to the commercial bank or financial institution in India against government securities. Okay. So this one, the repo rate mean repurchase or repurchase agreement. So this one is repurchase agreement. Repo rate mean repurchase agreement or repurchase option. Repo rate is classified under liquid adjustment facility, that is your LAF, okay, which is the quantitative tool of the monetary policy. Okay. So the next question on your screen is, which of the following is called as the banker's check? So the options are option A, that is demand draft, option B debit card, option C pay order, and option D fixed deposit. So the right answer for this question is your option A, that is demand draft. So demand draft is also called as a banker check. A banker check is also known as a or we can say that a banker check is also known as a demand draft. So what is this demand draft? So demand draft is a non-negotiable instrument issued by bank on behalf of its customer, which carries an order to pay a defined amount to a particular person in the same location, mean in the same city. So the branch that issued the check is different from the one that is paid. So a demand draft is valid for a period of 3 months. Okay, for a 3 month. There must some other point that are associated with this banker check. A term that is known as the debit card. What are debit cards? Okay, so debit card are issued by your bank by using a debit card. That fund for the amount of your purchase are taken from your checking account in almost real time. Okay, another point is your fixed deposit. What does fixed deposits mean? So fixed deposit put the sum amount in the bank for a fixed tenure at an agreed rate of interest, and at the end of the tenure receive the amount which was invested with compound interest. Another point is pay order. Pay order. So pay order is a financial instrument. It is a financial instrument that is issued by the bank on the customer's behalf, giving an order to pay a particular amount to a particular person in the same city. Payment order are not negotiable, and even this thing is printed in words on the instrument. So the banker checks are your demand draft. Okay, so the next question on your screen is, what is Dow Jones? What does Dow Jones mean? So the options are option A, that is share market index of New York exchange market, option B gold price index of the World Gold Council, option C share market index of the Mumbai Stock Exchange, and option D none of the above. So the right answer for this question is your option A. So what is Dow Jones? So it is the share market index of New York exchange market. Okay, so the Dow Jones Industrial Average, or the Dow is a stock market index that measures the stock performance of 30 large companies listed on the stock list exchange in USA. Okay, so the next question on your screen is, the National Housing Bank is subsidiary of. So the options are option A Reserve Bank of India, option B NABARD, option C Union Trust of India, and option D Life Insurance Corporation of India. So the right answer for this question is your option A, that is the National Housing Bank, that is your NHB, was established in 1988 and it acts as a subsidiary of the RBI. So it is the apex institution for housing finance. It is the apex institution for housing finance. Okay. So the next question sorry, on your screen is the main function of Exim Bank is. So the options are: option A, to help RBI in the regulation of foreign exchange; option B, to prevent unlicensed transaction; option C, to promote export and curtail import; and option D, to conserve foreign exchange. So the right answer for this question is your option C. The main function of the Exim Bank is to promote export and to curtail import. So the Exim Bank, that is the headquarters is in this Mumbai, is in Mumbai. So the Export and Import Bank of India, commonly known as this Exim Bank, was set up on 1st Jan 1982 to provide the financial assistance to the exporter and importer to promote Indian foreign trade. Okay, so beside that there must be some other function. It provide planning, promoting and developing export and import. Okay, after that providing technical, administrative and managerial assistance for promotion, management and expansion of the export, undertaking market and investment surveys and techno-economic studies related to the development of the export of the goods and the service. So I think this session is enough for today. So how did you like this lecture? You have to comment, you have to like this video, share, and most probably you have to subscribe our channel, that is the Pahari Talim Foundation. पढ़ना है बढ़ना है. So with this, thank you very much.